Hello, I'm Mike Travers, and I'll be taking you through today's presentation on RESPs 101. This brief 13-slide presentation will define exactly what registered education savings plans are, show the rules and components of RESPs, provide details on government grants, and touch on the different types of plans. For more information on RESPs, please see the other PowerPoint slides on my website. So, what is a registered education savings plan? Well, as you can see by the name, RESPs are a type of vehicle to assist in saving for education. Basically, the RESP is a contract between the promoter, which is, in most cases or many cases, a fund company, the subscriber, which is typically a parent or another contributor, and the beneficiary, who is the future student. Now, the RESP is a type of plan where the income grows tax-free. This is, of course, until withdrawals from the RESP are taxed in the beneficiary's hands. There are a few RESP rules to be mindful of. The annual limit no longer exists, but each beneficiary has a $50,000 lifetime contribution threshold for his or her RESP. No further contributions are allowed after the 31st year that the plan is open, and the plan must be closed after 35 years. There is no minimum age when opening an RESP. As long as you have a social insurance number for your child and the money to contribute, you're good to go. Registered education savings plans have a few different components. The first is capital. This is what the subscriber contributes into the RESP. The next one is the CESG, which is the Canadian Education Savings Grant. This is essentially free money from the government. You put money into the plan, the CESG matches to a certain point, which I'll discuss in a moment. Another free money offering from the government is the Canada Learning Bond. This is similar to the CESG, but not all beneficiaries qualify. The last component is investment earnings. This comes from both the capital that's being contributed to the RESP along with the CESG and in some cases the Canada Learning Bond. Now back to the free money part. The Canadian Education Savings Grant is added to the RESP at a rate of 20% annually for contributions up to $2,500. For RESPs where family net income is below $41,544, an additional 20% is added to contributions up to $500. While for those RESPs with net family incomes between $41,544 and $83,088, an additional 10% is added to the first $500 contributed. You'll notice the chart below illustrates the maximum grant the beneficiary would receive given the different net family income brackets. The CESG is cumulative in nature, so after maxing out the current year grant amount on $2,500, you will also receive grant money on additional contributions in a year, up to a maximum annual amount of $5,000. Again, there's no minimum age for starting an RESP, nor is there a minimum age for receiving grant money. However, no grant money is paid after a child turns 17. It's also important to note that in the last 2 years of grant eligibility, there must be a minimum of $2,000 in the RESP, or there must have been at least $100 per year contributed over the last 4 years. Another important point is that no beneficiary may receive or use more than $7,200 of grant money in their lifetime. Now, a little information on the Canada Learning Bond. Upon the opening of an RESP, the government will pay $500 into that RESP. In addition, you will receive $100 per year for a maximum of 15 years. This is only available to RESP beneficiaries where the net family income is below $37,178. Additionally, it's only available to children born after December 31st, 2003. I've provided you with the basic components of the RESP, but it's beneficial to know how the components fit together so you understand the process for paying money out of the RESP and what happens if your child does not attend college or university. Once the beneficiary is attending a post-secondary school and the institution is demanding money, the subscriber can request a withdrawal from the RESP through educational assistance payments. The EAP is made up of CESG, Canada Learning Bond if applicable, and investment earnings, which you'll remember is from the grants and capital invested in the RESP. It does not include the capital itself, although that is typically withdrawn along with EAPs. The educational assistance payments are included in the beneficiary's income in the year received. It is not taxed in the hands of the parent or other sponsor. In order to receive EAPs, you must prove that the beneficiary is enrolled in a qualifying educational program. This is usually provided through the institution's program letter details for the student. The program must be at least 3 weeks long and requires the student to spend 10 or more hours per week on courses or related work. It must also be a college, university, or other educational institution in Canada that is certified by HRSDC. If the beneficiary is studying abroad, it must be with a university, college, or other educational institute in a program at the post-secondary level and that lasts at least 13 consecutive weeks. The EAP is limited in the first semester to $5,000, but in the second semester and beyond, you can withdraw as much EAP as you want. In the event your child does not pursue a post-secondary education, you do have the ability to move assets out of the Registered Education Savings Plan. The original capital contributed is paid back to the sponsor, while investment gains are moved out of the RESP through accumulated income payments. Any CESG or Canada Learning Bond money received over the years is paid back to the government by the promoter. Note that typically investment gains on grants or even capital is not available to parents when they utilize a pooled education savings vehicle. Find out more on this topic in another presentation on my website. The accumulated income payments can be taken by the subscriber provided the beneficiary has turned 21 and the plan has existed for 10 years. Additionally, AIPs are available after the plan has existed for more than 35 years. The subscriber taking AIPs must also be a Canadian resident. AIPs are included in the subscriber's income and taxed accordingly. There is also a 20% additional tax rate on top of normal income taxes. All of these taxes can take a good bite out of the growth unless you have room in your RSP or your spouse's. The limit on the amount of AIP that can be rolled into the RSP is $50,000 per subscriber. I often find that clients with young children are unsure whether to use RESPs because it's difficult to know whether a child would choose the path of a post-secondary education. My recommendation is to utilize the RESP and grant money in case your child goes to college or university, but if they don't, you turn the education savings into future funds for retirement, provided you have the RSP contribution room. There are two different types of RESPs, both of which are pretty straightforward and easy to understand. The first is an individual plan. This is for just one single beneficiary. The individual plan can be opened and contributed to by a subscriber that is unrelated to the beneficiary. The family RESP, on the other hand, allows for multiple beneficiaries. All must be under 21 years of age and related by blood or adoption. The great thing about the family RESP is that you can save for all of your children's education in one plan, but then allocate greater education payment amounts depending on each child's needs. An example is that you could have one child that does a 3-year university degree, while another does a 4-year program and a master's degree. In this case, the second child could receive more money from the RESP in order to fund the greater education costs from being in school longer. However you utilize the funds amongst the children, each beneficiary is limited to receiving a maximum CESG amount of $7,200. Thanks for watching. Be sure to check out the other RESP related presentations on my website.